Alright everyone, welcome back to class. Right, in the previous section we look at the different ways to receive an item or to receive an inventory in QuickBooks. Right, we said the two major ways is to receive an item with a bill and to receive without a bill. Now I also went ahead to explain the difference. Now receiving with a bill means that you receive an invoice on those items, while receiving without a bill means that you did not receive an invoice on those items. That is as simple as that. And also look at how to, okay, did we? I don't know. I don't remember. All right, so now we are going to look at how to, first of all, before we look at how to pay our bills, right, we are going to look at how to receive inventory against a bill, right? If there was a bill that was raised, sorry, if there was an inventory that was received without a bill, now we are going to look at how to receive that item. Well, if you're looking at your screen already on your dashboard here, you see that this says enter bills against an inventory, right? So enter bills against an inventory. It means there was an inventory that was received, but the invoice for that inventory was not sent by the vendor. So in this case, when the vendor finally sent that invoice, what we need to do is to receive it from here, to enter that bill here. Right, we can do it from here, or we can use the vendor center here. Right, when you use the vendor center, you select the vendor. Now when you select the vendor, you come to your new transactions. So what are you doing? You can choose to, if you are receiving against an invoice, you can enter bills for a received inventory or received item. So when you click this, it will show you the list of the inventory that we have available. Of course, we have already received this item earlier on. Right, I think we have already received this item earlier on. That is why we have entered a bill earlier on. That's why we are having this, right? That's why we are having this right here. So that is it. I forgot that we have already done that. Now we are going to look at how to make payments, right? How to pay our vendors. Now this is very, very crucial. In QuickBooks, there are different ways to make any transaction, right? Now, in your knowledge of accounting comes in play. Whatever you choose to do in accounting, whatever you know about accounting is applicable, is valid. But there are some transactions that you may do at the end of the day, you realize that you have not actually done it the way QuickBooks actually recommend you should do it. Because the essence of using accounting application is to ease the process of doing so many things. Now, one may say, okay, I prefer to use journal to record my transaction. Of course, journal is very, very important. I have not even talked about journal yet. Now, journal is one of the major books of accounts or major techniques we use in recording so many things. We say that our accounts are classified into journal, right? When you record transaction, they go straight to individual journal, right? So when they go there, that is where we have the debit and we have the credit. Now, it is okay to use journal to record your transaction, but what is the point of using journal when you can just do it by clicking one place and your transaction is recorded? Now, to trace what I'm trying to say, now let me show you what I mean. It is okay. I say it is totally fine if you know accounting and you think you can use any of the accounting method and record your transaction. Of course, it might reflect, if you know what you're doing, it will reflect the accounts you want it to reflect. Definitely, it will reduce your balance. It will do whatever, it will definitely reflect whatever transaction you're doing, but there is no need of doing that. Now let's try and use journal and see how to reduce how much we are owing our vendor, right? How much we are owing our vendor. This is the total money we are owing our vendor. You can see we are owing our vendors a total of 5,557,000 naira. That's why what we are owing our vendor. Now it is definitely, this is okay for us to do that. It is okay for us to use journal. I repeat, so to use journal to record this transaction, you can just come to your accountant here. You can see make general journal entries. You can just click make general journal entries. Now when you click there, of course you always see this whenever you're opening. If you don't want to see it again, you can just click here, check this box. Once this box is checked, it will not appear again, right? So I will do that right now. Click OK, right? So when you look at it, this is our journal, right? This is our journal. Now this journal, we have used it earlier on when we move a certain balance from our what will I call it, from our opening equity account to our investors, owners contribution, owners investment account. We use donor to do that, right? If you just go back, if you see this transaction, you can see that this is the transaction, right? So, but that is not what we want to do now. Now, remember in accounting, they say wherever there is a debit entry, there must always be a corresponding credit entry. Now, this is where you are going to think. That's when you start reasoning. So, which account are you trying to reduce, right? Which account are you trying to reduce? Now, the account we're trying to reduce is our accounts payable that we are trying to reduce. So, when you come here, the rule of double entering is that you must always start with you must always start with the debit side. So when you come to your under the account here, of course, the date, the journal number is automatic. You can leave it. The journal number, you can as well customize it, no problem. The journal number is here, right? So when you come to the journal and the account, under the account here, now you select the account you want to reduce. Which account do we want to reduce, or which account do we want to increase? Now the account we want to reduce is our accounts payables. We want to reduce our account payable. So here is our account payable, right? You can see here is our account payable. So you select the account payables, and by how much do you want to reduce? Now let's say we want to reduce this account by 1 million naira, right? We don't want to pay at once by 1 million naira. Now when you have done this, the next question is, the next account you are going to think of is what? Is going to be your credit account. Now, but before then, you cannot put both the debit and the credit on the same column. So because you have to select the account that make the payment, which, because we are trying to pay vendor, of course it is going to reduce our cash or our bank account, right? So that is what is going to be. So which account is reducing? In this case, the account that is going to make the payment, we are going to say, okay, we are making this payment from our Zenith bank account, right? From our Access bank account. So you can see we have selected our Access bank account. Now the account is now in balance, right? So at any point in time, if this account is not in balance, this journal is not going to be saved. Now if I try to save this thing, if I try to save this this transaction, now it's not going to work. You can see the transaction account payable must include a vendor. That's number one, right? That's number one, because we must always indicate which vendor we are paying, right? That's number one. Now that's the number one thing we need to do. If you are selecting account payables or account receivables, for account payable we must select a vendor. For account receivable we must always select the customer, right? So that's number one. So here we are going to select the name of the vendor, right? So here we want to say we want to pay Prima Foods. So this is the vendor we want to pay, right? We have selected that. Now let's try to save it again. Now let me go ahead and say save. Now the next thing is the transaction is not in balance. Please make sure that the total amount in the debit column equals the total amount in the credit column. That's one thing. That's what I was trying to tell you. If the account is not balanced, it is not going to save. It is not going to save. So it is an error. So that's why here it must always be the same, right? It must always be the same, right? If there is any difference, you can see this is total, this is total for this column, this is total for this column. So the account is not still in balance. We must always make it balanced, right? So that is, I'm not saying you should go and start doing constructive accounting. What I'm saying is that you should know what you're doing if you're using journal. Now if I save this, it's going to save, right? You heard the sound. That sound means it has saved, right? So if you don't like the sound, I'm going to show you how to remove the sound later on. But for now, let's stick with it. So it will show us that we have already posted our transaction. So for now, you have seen that we have recorded the transaction, right? Now what's happened? Even though we have made the payment, but look at what happened here. Our total debt is still what? Is it 5.5 million naira instead of 4.5 million, right? But we are still having the same thing here. Now what happened? Are we wrong in recording our transaction? Of course we are not wrong, but in the context of QuickBooks, we did not do it the way we're supposed to. We did not use the procedure that QuickBooks could recognize in reducing the balance on that account, and that is what I want to show you. So let's go ahead and let's check what we did. Now to confirm what you did, accounting wise you are good, but QuickBooks wise you are not, right? I always say this to my students. There is no point of using journal when you can actually In fact, there is no point of you using journal at all. But in certain circumstances, in certain instances, you can use journal and it is acceptable and it is okay. But in transactions like this, when you are trying to pay your vendor, you don't need to use journal, right? You don't need to use journal. Now, accounting wise, like I said, we have recorded the transaction and it has reduced. But when we look at our bill tracker, we see that the balance has not reduced, right? The balance ought to have reduced to 4.5 million naira, but it has not reduced. We are not wrong. So let me show you. Let's come to our report. Now let's look for vendor. Now these are our vendors. Now let's look at vendor balances. Now look at it. So you can see that this our vendor, this primary food balance has reduced. Instead of 2.1, it is now 1.1. So if I open it, you will see the effect of that transaction. So you can see it. Now these are the two invoices. These are the two invoices we created, right? These are the two invoices. Now the last one here, where you're seeing general journal, you can see the general journal is now account payables and is minusing 1 million naira from it, and that's why we're having a balance of 1.17 million naira here, right? So that is that. But accounting wise is okay. Our balance has reduced. What we are owing our vendor has reduced. But why is it not showing here? Why are we not seeing it here? Why is it not reflecting? Because we did not use the procedure QuickBooks made us allow us to use. So in that case, there is no point of using journal, because even if you use journal to record a transaction, or you use this method I'm about to show you now, it is still going to reflect your account. But using journal is not actually wise, because whenever you look, this is something you can actually come quickly and look at your bill tracker. You see how much you are owing your vendor. But when you look at it, it's false. It's a false information, because you have already paid 1 million naira out of this 5.5 million naira that we are seeing in our account. So why must you use journal? Journal is used to make some, let's say, adjustments, and it is on rare instances that you actually use that. So in this case, let me leave this journal for now. I will leave this transaction for now. Now let's use the proper way QuickBooks recommend we record our transactions. So the proper way to do it is that if you come to your desktop here on your on your dashboard, you will see where they say pay bill, right? So pay bill, by definition, pay outstanding bills you have already entered into QuickBooks. So that is what QuickBooks is telling us, that you should use this option to record all the payments, all the bills that you have already entered here, right? Using either of these options, enter bill, this, either of them. So you use it to enter, you use it to make the payment, and that way it will reflect in your bill tracker, right? It will reflect in your bill tracker. Or you can as well come to your vendor section here. When you come to your vendor section, you can see pay bill, you can see click on it. But what is the point again of coming to your menu when you have it just right here looking at you? So I'll just click here. Once I click here, I will now select the vendor I want to pay. Let's say I want to pay this vendor. We can see these are the list of all the vendors I am owing, and these are the list of all the bills I have entered. Let's say, for instance, I want to pay this. Then this, I don't want to pay everything at once. I just want to pay 1 million naira, right? I want to pay 1 million naira. So I'll just type the amount I want to pay, and this is the vendor I'm paying. So I just want to type 1 million naira, and I am paying this vendor from where? I'm paying this vendor, let's say I'm paying the vendor today, which is the same day, the date of payment. I have entered the amount, right? If I want to pay a couple of vendors at the same time, I can do that, right? And this is possible if I am paying from the same bank account. I can select multiple payments at once, right? Let's say, for instance, let's just take this one for now. This is the amount I want to pay this vendor. The total amount I'm owing him is 2.4, right? 2 million. 2 million, how much? 47,000. But I want to pay only 1 million naira. So I'll go ahead and check the date of payment, right? The date of payment. Then under the check method, I will leave it on default here. I'll leave it to be printed. I'll just leave it like that. Then I'll come here right now. I'll come here and select the account I am paying from. So I'm paying from Access Bank, right? I'm paying from Access Bank. You can see QuickBooks is telling me, did you know that you can, if you want to make this account default, so that anytime you open it, it will always show this, right? So I will just say don't display this again and okay, right? That is it. Now when I do that, I have finished. Now if there is any discount at all that this vendor have given me, right, this is the right time to take that discount. This is the right time to take that discount. But in this case, I'm going to leave this particular one. So when we come back in the next session, when we are receiving the next bill, or when we are paying the next bill, we'll apply the discount received from our vendor. That's if we meet the terms and conditions of the transaction, right? So let's go ahead. After you have checked what you're supposed to pay, and that is what you're supposed to pay, then the next thing you're going to do is just click pay selected bill, right? Pay selected bill, right? When you just click pay selected bill, now you have this print check. Now this is a print check. If you want to print it, you can just go ahead and print for documentation purposes. If you don't want to print it, you can go ahead and say done, right? If you want to pay more bills, you can click pay more bills. It will see open this window for you. Then you select whichever bill you want to pay, right? You can see that our balance has reduced here for this vendor, Primer Food Limited. Our balance have reduced. So let's go ahead again and look at our bill tracker. So if you come to your bill tracker, now you can see that your bill tracker have actually reduced. So that's what I'm telling you, that you don't have the luxury of time to be going to report and say I want to check my vendors balances, and then I'll just come to, you don't have that luxury of time. So what you can do so quickly is to use your bill tracker. When you come to your bill tracker, you know that okay, the total bill you're owing is this. So how much are you owing individual vendor? Right? You can see that okay, this you're owing this vendor, you're owing this vendor. So these two bills, that's what you're owing this vendor. Then you can look at it. If you want to look at it in summary or in details, then you can come here and say okay, this is what I am owing this particular vendor and this vendor in total. But bill tracker is going to show you what you are actually, what your position is, right? If you make the payment, right? Now instead of having 2 million naira as paid balance, as paid the amount we have paid our vendor so far, we are having how much? We are having only 1 million naira. Now look at what happened. Look at the vendor's balance. Now look at the vendor's balance, right? You can see that this one has reduced by the 2 million naira because the journal transaction is still in effect. We have not deleted the journal transaction, right? It's still in effect, right? So you can see this is a journal transaction, but we don't want it like that, because when we look at our bill tracker, it is not reflecting that, except we come to check our vendor's balance. We are now seeing that it has reduced to 107,000 as what we are owing our vendor, because we paid 2 million naira. So that is not what we want to see. So let's go ahead, let's go back to our journal. So you can come to your accountant, make general journal entry, but there's no need because I have my open windows, right? My open windows is here. I have this journal. I can just click on it, and I want to delete this payment, this transaction. I can go ahead. Deleting of transaction is not advisable, right? As an accountant, it's an error to do that, right? You can maybe make a reverse entry for this transaction. So it's not advisable to delete transaction. So you can just make a reverse entry. Instead, you come here and say, okay, this is a reverse transaction. You can just say this should be 1 million naira back, right? 1 million naira back. 1 million naira back. Now which account again? Then our account payables will now be credited again, so that to reverse the transaction, that is the best way to reverse a transaction, right? That's the best way to reverse a transaction. So let's go ahead and do that. So that I will reverse that transaction. So if I reverse the transaction now, you cannot use more than one account payable in the same transaction. Okay. All right, so that is it. So because we have this, we cannot use more than one account payable. So in that case, I will just go ahead and delete this transaction. But deleting of transaction is not advisable. You can reverse it. So I can decide to, okay, I can decide to, since I cannot do that, I can say, okay, let me save this transaction. Let me save this. Right, so let me save this again. Let me save it and save a new. Right, then here I will now put my Access Bank account. I will debit my Access Bank account so that to increase the balance again, right, to bring it back to the original. Right, then I'll come here, my accounts payable. my account payables, I will just do something like this. Then here I will select the vendor primer food, right? Remember, deleting of transactions in accounting is not permissible, it's not allowed. So you have to reverse the payment so that they will see the flow of things. So you can just say reversal right there. So that's just it. So when you are done, you can save. So when you look at your bill tracker, you still have your bill tracker. You can see your bill tracker is still the same, but when you look at your balance, your vendor balance, you can see that it has increased by that 1 million naira. And when you expand it by double clicking the balance, you can see that these are the two transactions, the general journal entry, the first one, and the second one that reverse the transaction. So that is just how to make accounting entries. So you are not permitted to be deleting transaction. You can just make reversal so that it's self-explanatory to anybody that is looking at your account. So we have seen how to make payment, to record payment of payment against an invoice, sorry, against a bill we have entered, or payment to a vendor we have already entered as a bill. Right now, when you are making, when it is an immediate cash transaction, it is always very simple. We are still going to come to that. It's very simple. Now we have seen that. So let's say our bill tracker actually now reflects the balance we are owing our individual vendors, right? Let's say we want to pay another vendor, right? So you can just go ahead and click here, or you can go to your customer your vendor center and come to new transaction, select the vendor first. Let's say this is the vendor we want to pay this time around. Select the vendor first, go to new transaction, then you can say pay bills, right? You can do that from the dashboard. You can actually do that from there. Now when you look at it, we have these bills that are due. You can choose to do it by vendor, right? You can choose to do it by vendor. You can sort it by vendor. You want to only see the bills for vendors, right? For vendors. Now you can see that this is by vendor or by due date, or you can choose to do it by amount, or you can choose to do it by reference or discount, whatever you choose to sort it by to make payment. But either way, all we know that we want to pay Boa Food. Boa Food is the vendor we actually want to pay right now. So I'll go ahead and check. Okay, I want to pay Boa Food. I want to pay Boa Food this amount. Let's say I want to pay Boa Food the whole of his amount, because I want to take advantage of the credit terms he has given me, right? I want to take advantage of that. So to do that, what I need to do, I just tick here. I don't need to type the amount here again. All I need to just check this box. Once the box is checked, I'll come back to my date, make sure the date of payment is selected. Then my discount account, right? I'll set my discount. How much am I receiving as discount? Remember, maybe he said that if I pay early, he will give me a discount of how much? He will give me a discount of let's say the 400,000 naira is too much. Okay, let's say you give me a discount of 200 or 150,000, 120,000 naira discount. So if I pay on time, I will take 120,000 naira discount. So to do that, I just selected it, and I'll just now when I type the amount, the discount amount, right? When I type the discount amount, I will have this. So the total amount I'm going to pay him now, instead of 14 okay, let me make this 450. I'm very greedy, right? I know who know like money. So I know I'm very greedy, but no problem. So I'm taking the discount of 150. Now, what is the discount account? Where is the discount account? Where am I going to record the discount I receive? Now, this discount is not in cash. Now, this discount is not moving cash away from myself, but I need to have an account where I can track all my discount received, right? So that's what I'm going to do. Now, if you look at it, remember what I told you. I say whatever you are looking for, if it is not readily available there, you have the option to add it. That's why when you click, because this is talking about account, I don't need to go back to chart of account to start creating chart of account, to start creating a new account. I can just, from where I am right here, create a new account. So I can just scroll up, right? When I scroll up, I'll select add new, right? I'll add new. So I'll just say discount discount received, discount discount received. Now because it is an income account, you will see it here. So this is discount received. Discount received, because it's an income account, it is already selected that is an income account. Account type is this kind of account, an income account. Now I can choose to make it an other account, and so other income, right? I want to make it other income, right? If I make it other income, I won't be able to put it under any income account, so I'll just leave it under income, other income there, and just save it, right? Just save it. Now I have saved this account. The account is already saved in our chart of account, right? So you can see that this is what I'm going to pay, 3.3 million to our vendor, right? To Boa Food. That's what I'm going to pay, right? On this other hand, we have credit. Now if you have any credit available with this vendor, like when the vendor supplies something and it under supply, you can apply the credit on the vendor's next supply, right? We are going to see an instance how to do that, right? We are going to see an instance how to do that. We're going to raise another purchase order and under receive what we have already under receive what the vendor have supplied, and we make payment, and the payment was actually more than what the vendor supplied to us, right? So that is where to select the you apply the credit that the vendor is owing you on your next payment, and that is it. So this for discount and this for the credit. So that's it. When you are done, you can just go ahead and click done, right? When you click done, this is what we actually want to pay, and that is why we are taking the discount. So when you come back here, this you can leave on default, right? So when you come here, you will now have to do what? You will have to select the account you're paying from. So we are paying from this account. We are paying from our UBA account. Remember that all these accounts are fictitious account. None of them is real. So we are just using it for the purpose of this training. All the names you see here, all the transactions you see here are for training purposes. None of them reflect the actual transaction in any of this company, right? So let's go ahead. After we have selected this account, so let's click pay selected bills. So when you click pay selected bill, of course you always see this. If you want to print it, if you want to pay more, you can continue. If you want to print, you print. If not, you can click done, right? So we have cleared the debt we owe Boa Food. So let's check our bill tracker again. So if you check your bill tracker, you can see that our bill tracker is not telling us just the amount we are owing right now is just 1.17 thousand, right? So that is what we are owing, and we are only owing it to Prima Food. So that is exactly how to record your payment against an invoice, right? So I was saying something earlier on. I was saying if a vendor owes you credit and you want to apply that credit on your next transaction, let's raise a purchase order. Now on this purchase order, we are going to raise a purchase order for Boa Food, and we're going to raise for only this item. Let's say this, only this item. We are going to say this is 20, right? And the purchase order, this is it, right? So let's go ahead and save this. Right? So save and close, ignore. Now we have raised this purchase order. So when we come back, we're going to receive this item and make payment immediately. Now in the scenario we're going to use, it's going to be that the vendor did not supply everything, and when we are making the next payment, we need to deduct the value of the amount of the item he has not supplied, right? So that's what we're going to do in the next section. So stay tuned and see you in the next class.